Welcome back to another update for your financials. It is Wednesday, the 9th of September 2020. It is 6:30 a.m., which means the market's just opened. And speaking of markets, Tesla stock rallies after plunging record 21% during Tuesday's tech rout. Yes, yesterday the bloodbath on the stock market continued as there were major tech stock sell-offs. I think I was down $3,000 in one day, which totally makes sense. No panic selling whatsoever, just watched it, accepted it. But as I was waking up this morning, I saw a notification that during pre-market after hours, Tesla is already up as much as 7%. That's the notification that I got. Apple, Amazon, and other tech stocks were also in the green after the NASDAQ tumbled a record 10% in 3 trading days. Elon Musk's electric car company saw its stock price plunge 21% on Tuesday, erasing $82 billion from its market value. Tesla completed a $5 billion share sale and a 5-for-1 stock split last week, but it wasn't added to the S&P 500 as widely expected, and a key shareholder cut its stake. Tesla stock jumped as much as 7% in pre-market trading on Wednesday, laying the groundwork for a recovery. The rebound comes after shares in Elon Musk's electric vehicle maker plummeted 21% on Tuesday, their biggest one-day decline ever. The plunge wiped about $82 billion off Tesla's market cap. Apple, Amazon, Microsoft, Facebook, and Alphabet all rose more than 1% in pre-market trading, pointing to a broader rally for the NASDAQ after the tech-heavy index plunged a record 10% 3 trading days. Everyone knew that tech stocks were way overvalued. It was bound for correction. I don't think it's the end of the world just yet, but this market really doesn't make any sense. Tesla stock jump follow its completion of a $5 billion share sale and a 5-for-1 stock split last week. However, the company was recently snubbed by the S&P 500 despite meeting the benchmark index eligibility criteria, and key shareholder Bailey Gifford cut its stake, citing internal rules on the weight of a single stock in its client portfolios. Tesla shares were still up close to 300% this year at the close of trading on Tuesday, so even with the correction, they're doing incredibly well. I mean, the stock is cheap right now because it's split. If you are only able to get whole shares, that's definitely something you might want to be interested in, but you can always buy fractional shares on most exchanges now. And just remember, in my opinion, the stock market, particularly tech stocks, are the riskiest of all right now. Let's go ahead and switch over to some Bitcoin gold news. Bitcoin's correlation with gold hits a record high. Bitcoin is now more closely tied to safe haven gold than ever, possibly bringing the crypto greater resilience to risk aversion in the traditional markets. The 60-day correlation between the two assets is hovering at record highs above 0.5, according to Coinmetrics data. The positive correlation has strengthened sharply since the beginning of July as the US dollar started taking a beating against other major currencies. The sell-off in the greenback, the global reserve currency, is seen as boding well for scarce assets like Bitcoin and gold. The strengthening of the positive correlation appears to validate the popular narrative that Bitcoin is a store value and a haven asset. Some investors believe it is sound money, like gold. As such, the cryptocurrency's sensitivity to movements in risk assets, mainly equities, could lessen. Bitcoin defended the $10,000 support for the 5th straight day on Monday, despite losses on Wall Street. The repeated defense of the critical support, coupled with several bullish developments in on-chain metrics, suggests scope for a recovery rally. That's right. Bitcoin's hash rate, or computing power, has risen to fresh record highs near 150 exahashes per second. That suggests miners remain unfazed by Bitcoin's recent decline from 12,400 to 10,000. I'm still bullish too, folks. I really am. Further, the percentage of Bitcoin unmoved in over 3 years has hit a 2-year high of 30.91%. It suggests an increase in the holding mentality. The recent drop represents overselling, and buyers may soon step back in again. Oh, I definitely think we're not done here. And on that note, this article here, Bullish sign, the current Bitcoin price correction is typical compared to the 2017 bull run. History suggests that Bitcoin's recent $2,000 drop is an ordinary development, and it could actually boost its price higher in the long run. Let me tell you something, guys. I've been watching these prices almost every day since 2017. A $2,000 correction in one day is totally normal. It's definitely not anything to be worried about. And I mean, when I was paying attention to this, I watched Bitcoin drop to almost $3,000 last year, and I bought Bitcoin at that price. Even with the correction, it's at over 10,000 right now. Like, I'm doing well. Oh look, here's that news right here. After dumping to below 3,700 during the massive sell-off in March, Bitcoin went on a roll. March 19. I don't know why they keep saying March 2020. They're definitely confused. It did not happen in 2020. The primary cryptocurrency recovered its losses in a few months as the bulls took control. The asset kept surging in the summer and painted a year-to-date high of 12,450 in mid-August. Although Bitcoin surpassed the $12,000 mark on several occasions, it displayed issues maintaining above it. Following the latest pump on September 1st, BTC reversed for a violent price dive. After that, Bitcoin plummeted to 10K and even dipped below the psychological line a few times. As of writing these lines, BTC still struggles to remain in the 5-digit territory. And let's just go look. Yeah, I see that. Okay. History suggests a possible price pump. The popular cryptocurrency YouTuber and analyst Lark Davis noted that this price dive is somewhat expected in bull runs. By looking at the macro scale, he compared Bitcoin's recent price behavior with the 2017 bull market when the asset was on its way to its all-time high of 20,000. Davis brought out the 20-week moving average as his reasoning. As seen in the chart above, BTC tested the moving average on multiple occasions from the start of the last bull market in early 2017 to its peak in December 2017. Davis categorized these events as the point of max gains. The analyst highlighted the importance of remaining above the 20-week MA. When BTC's price fell below it after the bubble burst in early 2018, the asset went into a year-long bull market. This culminated in Bitcoin's 2018 low of 3,100 only after a year after its peak. I remember that. Since then, the relationship between BTC and the 20-week MA saw its fair share of reversals before Bitcoin reclaimed the higher ground after the third halving in May. By charting the massive red candle last week, BTC tested the 20-week MA once again. Consequently, if Bitcoin is to repeat its 2017 behavior, this dump could turn out to be another opportunity for max gains. I'm still very, very bullish. Okay, let's take a look at everything. After a major correction for the last few days, just about everything is back in the green. XRP at 24 cents, Chainlink, Polkadot. Let me just kind of go down here. Cardano under 10 cents looks like a good pickup right now. VeChain almost about to be under a penny again. Very tempted to snag a bunch when that happens. But everything's doing well. I personally think we're still going to see a crazy year for cryptocurrency. You heard it here. Let me know how that goes. Drop some comments in a few months. Gold, back to where it was maybe a week ago, trading in the mid-1900s with silver just barely breaking into $27 again. Don't forget that the United States will be printing a lot more dollars this year. So if you're looking to hedge against inflation, gold is considered one of the safest bets and always has. And silver too. So just something to think about. I think I plug silver and gold purchasing every time we come to this page on every single video I do. I'm not affiliated with any online retailers of gold, so you pick the one you like. But you can definitely go to a local dealer, or you can order and have it delivered if you feel comfortable doing that. That's going to do it. Pretty short update today. Things are looking like they may be correcting. It'll be an interesting video tomorrow to see how that all pans out. And with that, have a great day.